Yo, what is up, Emmy? How you doing today? Hope you're having a wonderful day. Today we're gonna actually, it's close to London session, so what I decided to do today was come on here and do a little bit of basic price action. So first thing we're gonna go over is a little bit of basic candle patterns, or not patterns, but well, patterns and basic candlesticks that to identify what they're doing. Then we're gonna go into a little bit of price action, like as far as patterns. So there's actually patterns created within the market here. Like this here is a flag pattern. You have a pole, and then you have the flag here within this part. So this is pretty much considered the flag. This is the pole. So we're gonna go over some stuff like that, and then we're gonna get into at the end of it. I'm actually break down some of these charts, so you guys can kind of see what's going on, and then also since we're so close to London session, I might do a markup into what I can see possibly happening here. And then if it plays out, then obviously it plays out, but it's just so that you guys kind of get an idea. So anyways, first thing we're gonna do is we're gonna go into a little bit of candlestick patterns, okay? Let me get over here. Let's chart patterns. Give me 1 second, guys. Let me find out what I'm looking for. So first thing we gotta understand about candles is we have, this is a basic candle. So this is the body. So we have the body here, and this is pretty much where price was within. So this is the open or the close, depending on where price is at. So let's say we're bearish. Um, this is the open, and then obviously the market goes up highest. This is the highest point of price, and the market pushes down. This is the low point of price, but ultimately it closes here. And then if it's the open in this next one, we might push down, and this be the lower price, but then ultimately it pushes up to where now we have a higher point of price, but this is the actual close to where price closed at. And this is all based upon, time frame. So this could be a 1 minute candle, or this could be a 5 minute candle, or anything to like a daily. It just all depends on what time frame you're looking at. So we'll go into that a little bit more. We're gonna get into a couple bearish candle cheat sheets. I'm sorry. So the first thing is gonna be the hammer. The hammer is obviously a bearish to bullish turnaround pattern. So you have bearish, and then you have price reach down here at this wick. So the wick is the tail. And then once it pushed up to close, it closed above, slightly above the previous close of the bearish candlestick. So now this is a bearish candle. I mean, a bullish candle, I apologize. Until the next candlestick is printed and stays on top of it to continue the bullish aspect of this, okay? Inverted hammer is the same bullish to bearish, or bearish to bullish, I apologize. Bearish candle closes, but the candle opens on top of the bearish here to create the bullishness, and then this sits on top of it in order to change the direction of a bullish aspect, okay? Shooting star is the opposite of a hammer. You're gonna have bullish. You're gonna have bullish price action push up, but but the sellers become in the market to push the price down in order to create this wick. Okay, so now there's the next candle that prints, which is a bearish candle, and then now we start to consider the bearish aspect of the candlestick pattern. Okay, hangman is the opposite of inverted hammers. You have bullish, and you have the bearish next candle open at the same point, but it closes below the bullish opening of the previous one. So now we're in a bearish aspect. So bearish. Morning star is very one that I like to use pretty heavily, especially in the lower time frames. So we have bearish, and then you have this bearish candlestick to where price opens and then it pushes down and then rejects it. The price becomes slightly bearish above the close of the bearish, comes slightly bullish over the bearish closing of the previous candle. Now the next candle is printed, and the bulls take over to continue the bullish aspect here. Okay, this is the same thing as the evening star. Okay, bullish, bearish, evening star to where it pushes the bearishness down. The bears take over here, or the sellers, or whatever you want to call it. The point of it is it changes direction. A bullish engulfing is one of the highest candlestick patterns I would say in general in trading that is pretty consistent. But there are times where you have to, pay attention, and I'll get into that later too as we go over trading or into the charts more. Okay, but we have bearish, and then we have this one bullish candlestick here that engulfs, which overlaps, if you want to use another word, to the whole bearish candlestick. Now the bulls and the buyers are in control. So the bias of bullish aspect starts to turn here because of this one candlestick. Same thing with the bearish engulfing. We have bullish, bullish, bullish. The bears push this candlestick, or the sellers, to completely engulf the previous bullish candlestick, and now where they continue the bearish move here. Okay. Um, I'm not really gonna get into these four right here. Price lining, which is pretty much price speaks on the lines and then it changes direction once it breaks this top. So these are kind of like price came down here, but then it came here to where it doesn't really engulf it, nor does it really state a complete bullish aspect. It's just really when this next candle for me. This might be something else that's explained differently by someone else, but for me, this is what I've taken it as, and this is how I use it because it's just simple to me. Okay. So now that this candle is printed here, this candle sits above this previous bearish, where this previous bearish open was, is where this previous bullish open is at, and it contains and maintains the bullish close above the previous bearish sorry, the bearish open of this one. Okay. So that's kind of how I use it. So there's hammer. We went over the hammer. There's just different type of pattern sticks. You can research them. I didn't really do too much besides come to candlestick patterns, and then I just clicked on. I didn't know which one. I think it's this one I might have clicked on. I don't know. I clicked on one of these, and then it just came me to this, so where I can look at this. Okay. Now we're gonna go into patterns. So chart patterns. Okay, it's something that's happens throughout the whole market, but depending on what you're really looking for is what you're gonna really kind of understand where you want to go in the direction. Okay. You got some things as bearish double tops. So you have a top here and a top here, so there's double tops until where the aspect should be bearish. There's bearish head and shoulders, where there's a shoulder, left shoulder, a head, and a right shoulder, to where the market should push bearish. There's a bearish rising wedge, where you can see it looks like a wedge. And we have bullish price action. And then we have 1, 2, 3, 4, 5, 6 movements before we break this actual little line of, I guess you would say, a trend line or support line, whichever one you like. So where we have a bearish break here. And then now from here, price can go in any direction, but it's just a pattern that you can look for. Bearish expanding triangle. So it's a bullish move to where the triangle, which is this type of triangle, isn't expanding because it's going towards an open rather than here where it's closing to a point of it's squeezing into this here. This one's the opposite. It's going 1, 2, 3, 4, 5, 6, and then it's pushing this way immediately down. But this is just another pattern. Bearish triple top, which is 1, 2, 3 top before it continues the bearish ones. I used to trade all of these. Okay, look at the little Doge guy. I used to trade all these, so I'm speaking from experience of how these work. I used to really, really like trading patterns, and I still look at them. I just don't use them as more or less an entry or a type of trade, I guess, idea, because I'm more into you want to call it institutional trading or smart money trading, whatever you want to call it. There's different words for it. Give me 1 second, guys. Let me plug in my laptop. All right. Sorry about that. So this is something I really used a lot going into trading, but I had to kind of stop because I'll explain why. So there's different ones. Like I said, there's descending triangles. There's symmetrical expanding triangles. So there's a whole bunch of patterns to look through. I would say the most common ones are going to be the bullish falling wedge, the bullish flag pattern, the bearish flag pattern. So for me, it would be these here. These, I guess you would say 6. And then obviously the double top and the double bottoms. But I don't use those anymore. But this is just a basic. I want to show you this so this makes more sense over here. So we're going to come over here. We're going to go into a little bit of price action, I guess you would say, call it. So it's candles, understanding candles. And then you'll see how we get into how they fit flag patterns and just different type of patterns in order for you to kind of really understand a lot more. So first of all, this candle by itself, this is one of the candles that we went over. Okay. So this singular black candle here is These two candles here are one of the patterns that we researched. So give me 1 second. I want to make this a little bit more bigger so we can see it. Okay. So this here is, what is this called? This is gonna be a it's gonna be a bullish engulfing. Okay. So this bullish candle, so we have bearish, and then we have this one bullish engulfing candle. So that's what this is here. We have a bearish move to a bullish engulfing to where the next 4 candlesticks are bullish. 1, 2, 3 here. So in total, it's 4 candlesticks to move this way. So this is one of the candlestick patterns that we're looking at. Let's see if we can find a hammer. So this here is, I believe, it's not a hammer. 1 second. This is a, don't really like it, but I'm just trying to find the best one, guys. Oh, there's one right here. So for example, this here is a hammer. We come back to the, here we have the hammer. So you see how it's bearish, and then a bullish candle with a wick. This, for me, the black is going to be the bullish candle with the wick for me. And then we have the move of the bullishness come here. Okay. So that's another candlestick pattern. Let's go look for a, let's see, 1 second, guys. Let's see if we can find a inverted hammer. Okay. 1 second, guys. I think I might see one. This might be one here. Might not be the best one, but it's definitely one here. So we have here inverted hammer. Oops. Inverted hammer looks like, if I can find it. Bearish, and then the bearish bullish hammer is upside down. Okay, so bearish, and then the bullish hammer is upside down. It's a little bit fuller than I would like. I'd like it a little bit more thin, on more of a wick, but all in all, it's still the same type of price action. So bearish, bullish, and then here, funny enough, we have a bearish engulfing here. Okay, with the blue and the black. Okay, and then we have a, it's called somewhat of a harmony, which a harmony is a pregnant woman. So as you can see here, this is going to be the woman, and this is going to be the baby within her stomach. This is another pattern, a pattern that I'm not, I didn't show you guys, but you guys probably understand that pretty simply. And then here we have a, let's see. Now that this is here, this is like a bearish engulfing here. This is a bearish move, bearish candle, but this next candle shows that where price closed at, it opened above. So price closed here with the bearish push down, and the price went up here to close above the previous close of this one. So now this shows the momentum for the bulls. Now this could still fall, but you'd have to watch this candle price action here, which this isn't something necessarily I'd get into, but it's just showing you guys pretty much how it works. So this here is kind of another harmony, just a little bit different. But if you see it, you can probably understand it. Get this, can't get line, oops, can't get lined up, but bearish engulfing is what it is. It's bigger than this one. It overlaps it, but the harmony, like I said, is the pregnant woman with, this would be an upside down one, so invert it, I guess you would say. Pregnant woman with the baby inside of it. So that's how I learned it, through the Candlestick Bible, a very good book that's definitely helped me a lot in understanding patterns. Another bearish engulfing here. Okay, so it's another bearish, bullish to bearish scenario. Then we have, don't remember, guys. We got like a hammer here, not a hammer. What is this gonna be? This is gonna be a shooting star. So this is like a shooting star here. It's not the best one, but you can kind of see where it's like bullish, and then the star comes back down, and the next one is bearish. So it comes up, and the next 3 are bearish. So comes up, and 1, 2 are bearish. This one's like a stutter candle, which is not really stating where it's going. So this candle here actually becomes kind of like this evening star candle again, where price kind of doesn't really show where it's going. But you know, so that's kind of that. I want to get into what we were talking about with patterns. I've seen one earlier, and it's funny because you'll notice where the patterns come in. So the first one we're going to talk about, which is probably the most common one, is going to be the flag pattern, the bullish. So you have a pole and then you have the flag with the price action consolidating within it. Okay, so what I mean by this is um, we have a flag pattern within where we have a flag created horizontally to where it consolidates this way and then it continues to move. So as you see this one, it continues the consolidation within it. This is a like an angled one, but there is flat ones that happen like this where it's just flat. So you see it consolidates within the box and then it continues the bearish move this way. Okay. Same thing with here with the bearish. So you have the bearish pole and then you have the bullish flag into this point. And it's funny too, because look how this flag of bearishness creates the flag of bullishness on this side, because this is consolidation to where price is stuck in here regardless. And then they decided to change the direction. Okay, so it's very simple to see. But these are the two most common ones. And then it's funny too, because most of the time the bearish engulfings are the heavy bearish or bullish price action by candlesticks, meaning that you see how all these are bearish. There's no bullish candlestick. Those 1, 2, 3, 4 bearishness usually create into a type of flag. Same thing here. You have 1, 2, 3, 4 to the 5th bullish candlesticks to where it creates the flag to sit on top. Okay. Same thing with this one. You have a bullish engulfing here. These two candlesticks here, until where now the next consolidation creates here. Okay, this is another flag pattern until where it comes slightly above this here, and then it rejects off of it, doesn't continue it, so then it goes the other direction to where it's bearish. Okay, this here is another pattern on a lower time frame. So that's another thing I want you guys to understand is on different time frames, you'll see different patterns, or you'll see the same pattern on different time frames. I'm sorry, not that. That's not what I meant. So this is where you have to really get into understanding the higher time frame means the most. So if I'm looking at the 4-hour and I go back to the parts I just marked up, okay, you see how small they look here compared to on here. So this is that bearish to bullish aspect, and this ultimately is one candle on the 4-hour. This is the bullish engulfing pattern. Candlestick, bearish, aqua, bullish, overlapping and closing above the bearish one. Okay. So the higher time frame holds more value or more structure or whatever you want to say. It's just a stronger impulse of it. Okay. So being that is, if I see this on the 4-hour, it might look completely different on the 30-minute. Okay. And always remember that the higher time frame is pretty much your ultimate bias, because you might be on the 4-hour buying and then you're on the 30-minute selling into a buying section on the 4-hour. And then let's say you just hold it, and for an example, like something simple, let's say, oops, wrong one. One second. So let's say I sold here and then I was looking for a price to come like down here somewhere. And then my stop loss was right above, oops, right above the high here. Okay. And let's just say that, like you see here, I'm looking for price to come way down here, but it doesn't come here immediately. So price eventually almost comes back to the top. It doesn't take my stop loss, but the point of it is all that movement I had here was somewhat kind of lost. But if I was shooting for way down here and then eventually it hasn't got there, price still has almost came up all the way back to where I was previously up here. And that's not going to be fear of, but it's just the point of you kind of have to get used to taking what you're given. So that's 100 pips. So 100 pips is pretty much points. The main average from London to New York, as far as what I've noticed, is about 100 max. So sometimes depending on news, it could be 200, 300, but normally about 100 max. So at this point, you're kind of at a point where it's like, you know what, just let me take my money and go, because you're just being greedy, honestly. But I'm sorry, that's a whole other thing. But back into like to the flags. So let's see on the lower time frame. 1 second. So here on the lower time frame, right here we have that the inverted hammer or the shooting star. Sorry, yeah, shooting star, bullish, 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 shooting star to make the bearish one. It's not the best one. There's probably a better one somewhere, but you can understand how the bias of the direction changes. Okay, and then we have things like this where bullish engulfing. To move the bullish part here, we have another bullish engulfing and above this one. Okay, and then what's funny is what's in these two here are this candle necessarily, this 1, 2, 3. So this 1, 2, 3 here plus this 1, 2, 3 here is going to be flag patterns on a 5-minute count on a 5-minute time frame. Right. 1 second. So you see here how this is the pole. Now that if I move it smaller, this is the pole, and this is the flag. So you see how this becomes the same candle pattern or pattern in general, not candlestick necessarily, but pattern. You got a bullish flag right here. You also have a bullish and then a flag here, and to another bullish and a flag here, to another bullish and a flag here. So you just have them. It's like a repetitive cycle. Some of them different. They don't always play just flags, but you can just sometimes they do wedges. So kind of like this here. This is a wedge to me. This is a descending wedge. So you see how it's descending from here to here, and then eventually it just squeezes into here, and then it breaks the other way. So this is the wedge within here. This is also known on different methods. So there's different methods. So if you guys whack off, if I'm saying that correctly, this is the thrust, meaning that this is the final push of a bearishness. And this is kind of like let me not get into that. It's a little too heavy, but pretty much it's just the market pushes down and then we consolidate and then we push back up to make a higher high and another higher high and then another higher high, higher low, higher high. So it's kind of another pattern, wedge pattern. So there's just multiple patterns within the market. And then, yeah, you guys kind of just go through them over time. You'll see them more and more. It takes time to learn them. It takes time to see them. These. Really don't like any of these as a pattern. Yeah, this is a bullish with a flag. So this is probably on like a 15-minute here. Where's the This is the flag pattern pole. So go to 15-minute. That'll probably look a little bit better. Don't guess. So bullish pole and the flag here. Okay. Bearish is just the opposite, man. Guys, it's just the opposite. See if I can find a good bearish. You've seen this bearish one, but let me see if I can find another one. This is kind of more of a bullish market, so I have to wait till I see a kind of a bearish aspect. Let's see. So this here, sorry guys, this here is going to be the same thing. Bullish flagpole, and then this here is going to be the actual bearish part. Okay, so this is a bearish flag. So you have the pole, and you have the consolidation to continue the move of bearishness here. Okay, that's what that one is. This here on the lower time frame is also another one. So this is the pole. That's a pole. And then within this consolidation here, like on a 3-minute, that'll be the actual, if I can get it though. It'll be the actual move. Whoa. All right, well, that's gonna take a while to load. So you guys get the point. It's just patterns, candlestick patterns. So what I'm gonna do now is I'm actually gonna erase all this, and then I'm gonna do a little bit of a breakdown right now because it is 12 o'clock. So London session is open. Now this is gonna be a little bit different. I am gonna use the same candles and the same patterns, but I'm gonna use a little bit more structure. So support and resistance, or for me, it's just points of interest because I trade a little bit different. What this is obviously a high. Okay. If I go to daily, it's a little bit extra. So this is going to be maybe a little bit more, a little bit harder to understand because it's more advanced. I've been trading for about 4 years now, a little bit longer than 4 years actually. So this might be a little bit more than the easy stuff, but it definitely won't understand. It won't be too hard to understand. So you see this bearish engulf in here. We took the low, so we took the bottom of here with this wick. So now I'm looking to see if we can take the high of this candle just to bounce, just to take it out. As you see here, most of the time it doesn't always happen, but for an example, like this is a bearish, we took the low, so now we took the high, so now we might continue the high here. But this is what I'm saying is my destination, my target, okay? I know this is the previous low, okay? So they might want to come for this low, but that's on the daily. So that's just kind of how I see as like where I'm going to go within this week. Very nice. All right, so now that we're on the 4 hour, I kind of know that from the bottom to the top here is where my range is at. So now what I see here on the 4 hour is I'll go a little bit more into depth and like where price can come. So these are just extra areas of where price can come to. So I usually put X's to where I want it to be. So for an example, like that's crazy big. Hold on. All right, so this is the X, meaning that this is one of the destinations, and then this is the X being one of the destinations. This is a top, so meaning that most people here that sold previously probably have a stop loss up here or a break even for the sell. So meaning that this is like institutional trading. So meaning that the probability of them doing, what's it? Let me find the paintbrush. So the possibility of them doing this like that is very high because they might want to come and take the stop loss with these people up here, or they might want to do the other way where they come here and go this way. So there's the two options. These are the two possibilities that I'm looking at. But my point in that is that's kind of my understanding of what can happen. So I use that just for, ideas of my targets. This obviously you see here. So another way to break this down is we see this bullish engulfing here. And then we see the flag that's created right under here, okay? So now this here, the next candlestick pattern is the same thing. We have a bullish engulfing. So where now we have the sideways consolidation here. Oops, that's not what I want to do. Sorry, apologize. Excuse me. So see how we have the same pattern here as the other one. This one I could probably change to green also, just so we can see what the patterns are. Okay, so my point is that they can continue the flaggish pattern here. So they can continue to go, they can continue to do this like that. But that's kind of where I want it to go because I want to see this target here be accomplished. And this flag pattern plus this flag pattern are showing me the bullish move, bullish engulfing pattern, bullish engulfing pattern. Now I want to see probably on the 1 hour another bullish engulfing created here somewhere. Probably where, let's see, probably where this part is at of the green one. So I probably want to see this previous flag pattern hold the support to where before it wants to push back up to this target, okay? So that's kind of where I get the idea. So you guys understand the idea. This is a target, but the price of the candles plus the flag patterns show me the possibility of going there. The possibility of them going bearish is still there. And the reason that being is because look at this part here. This is more bearish, faster. What I mean by faster is you can come to over here and you can show where the roller's at and how long it took. So from the top of this to the bottom of this, it took 4 bars. So it took 16 hours, okay? And in order for them to do from the bottom to the top to where price is currently, it's taken them 4 days. So you can see the difference. So the momentum ultimately on the higher is bullish because we're on a bullish trend. But where price is at right now, it's showing us a higher bullishness scenario. But then you also have to look left to this just to know that, okay, there is that possibility where it could be bearish. But I know I want to reach for here first. So it's just about knowing what you're looking for, okay? But oops, what did I do that for? All right, so with that being said, take some of this away. So it's kind of pretty simple. I don't like to do too much craziness, but you can see the patterns. And then so for the 4 hour, and then I'll go to the 1 hour and see what I see on the 1 hour. Like I said, I see the flag pattern. I see this other flag pattern. So I have an idea of, okay, somewhere within right here, if we can stay above this, I'm gonna look for them to come up here. Um, and then we're kind of just waiting. Like what I'd like to see here, um, I'd like to see, this isn't right now, but I would like to see in general like this type of pattern to where the market moves a bearish candlestick like this. Okay, so I like to see the bearish candlestick, but I would like to see out of the bearish candlestick, I like to see that. I would like to see. Hold on, guys. That was very ugly. One second, guys. So I'd like to see this wick like that, and then it's not gonna line up right with it. It's gonna make me a little bit harder. So one second, guys. So you guys get the point. The point of it is to be a bearish type of candlestick, but I want it to be a hammer. I wanted to start off bearish, but then I ultimately want it to end up being a bullish hammer, being a green one. And then you'll see here, I want to see the price action come down, but ultimately I want to see the bullish hammer here, like somewhere down here or somewhere within this area here. So it's kind of a big area, but you get my point is because it's kind of early. So I'm looking for price to come down here and then create a hammer into where they'll end up coming back up. So this is the price action plus the formation, which being the pattern, plus the target is what I'm looking for it to actually do. So that's what I'm kind of looking for. So actually tonight, this will be something I really look for me, how I trade, I use fibs. So fibs, this is not going to be my normal fib because I haven't changed it. Second, I'll run through them real quick. So that was 50.77. Where's it? Okay, so those are kind of the ones I more or less use, and then they're all black. I don't change them. So like that. One second, guys. Uh, oh, okay. Hold on one second, guys. Now I know it. I was like, what am I doing here? Is that it? I don't know if they, I'm trying to get this background to change. Hold on, guys. I don't remember how to take the background now. Oh, there we go. There we go. All right. So how I trade is I like to use fibs. So fibs are pretty much for me a representation of the best entry. So saying that this is the one being 100, and this is a zero up here. So if you're at 100%, you want to obviously come back to the percent to where you're going to gain the most back. Okay. So for an example, let's say I am on one. So let's say I have 100 yards here. Okay. Let's just say for an example, this is 100 yards. If I take a 71 fib, I'm going to gain the 71%. But if I lose, I'm going to lose the 29%. But if I was going to take a trade from the 60, that means I have a 60 and a 40 chance. So my percentage of my actual account staying positive is a lot lower, like a risk to reward. So here's a 50 pretty much. So 50 would just be 50-50. I'm either going to lose 50% of whatever I'm trading or I'm going to win 50%. For me, I got to have a bigger margin. So for me, I always like to have, one second, guys. I always like to have a higher one, as close as I can. So this is where it becomes my margin of my risk to reward. And then ultimately, I'm really going to want to see it come up to these highs. So this is going to be like that. That's pretty much what I'm looking for tonight. I erased the the fib. That's pretty much it. Nothing too hard. This does all depend also though on what the DXY is doing. So if the DXY is moving a different direction or whatever the DXY, the euro is going to do the opposite. So being that I'm looking for the bullishness on the euro for this, don't mind all this. This is just a markup I was doing the other day. I was teaching. Okay. Second, guys. All right, so pretty much what I'm looking for here is just opposite. Okay, so I'm looking for the opposite. It's pretty much just the opposite of what I just showed you on your USD. Okay, looking for this original bearish move to continue here, to take out the tops here, which are the same tops as Euro USD on the opposite way. It's just, yeah, so there could be actually, it could come higher than that, but my point is I'm using this for my benefit because the DXY is a dollar, so it's just the opposite side of the euro, so it should give me the same thing. But I can't say that that's it. The dollar could continue to, one second. So this is actually the correct one that I'm looking for here for the euro. Is this top here? But I could look for that one too, which I'm gonna have to look where that's at in a minute. But also there is more room for the price to come up. But right now, the higher risk, the higher reward is gonna be for them to come in here and then they're gonna bounce. And then what I'm looking for around this time is, can I get in this area around 12:45 to about 1:15? Because that's a 30-minute window where I like to trade or enter my trade in order to see if this objective is made to where I could sell this way. Because normally that's kind of where the market shifts direction, is those 30 minutes. Doesn't always happen, but that's going to be my entry window for myself to look for. And as you can see right now, we have bullish engulfing with the big wick coming up this way. But on the higher time frame, this is what we have in this same area of where price is created. So we do have this bearish move. We do have this bearish move here. We got the 1, 2, 3, 4. We have one slightly bullish, but this is more or less just a pullback of this previous bearish candlestick to even it. This does look what I'd want to do, but I'm not 100% because what also is there is this, which is higher high. Okay, so higher high, higher low, higher high, higher low, higher high. So this could be this. But overall the DXY is bearish. So that's what's kind of considering me on the bearish aspect. But yeah, so this might be the area where price comes up to here. So it's just kind of just waiting, sitting waiting game. But anyways, guys, I hope you guys enjoyed that video. I apologize, I kind of rambled up on a little bit there, but it's something I'm very passionate about, and I love to get into trading talk, and it's just, so much love. Peace out. Have a good night. See how long this session goes.